Your Uncle Joey may have just forgiven $10,000 in student loans, but Uncle Cody is here to tell you the best way to build wealth is depending on yourself. Recently, I've had a lot of viewers saying I'm giving up way too much in capital appreciation when I'm doing my monthly dividend video series. Now, I can see how newer viewers could think this because all they see in these videos is just me stockpiling a bunch of dividend stocks. But OGs to this channel know that I used to share my entire portfolio, every position, every gain, every loss. And while the portfolio is way too big to do that today, over the next two videos, I want to share my top 10 largest positions. I want to showcase while I do love dividends, growth stocks are definitely a key in my portfolio as well. And many of these stocks, they also pay dividends, so it's the best of both worlds. My portfolio is now up to $113,000. I've been investing in the stock market for about 4.5 years now, and just because I own a stock, that doesn't automatically mean it will fit in your portfolio. That's why you gotta do your own research and know that this won't be an in-depth review, it's just gonna be highlights of the company and showcasing my portfolio. Stock number 10, Google. I currently own 25.68 shares of Google, making up about $3,000 in total equity. I'm glad Google did a long overdue stock split, so I don't need to spend 3 G's on one share anymore. Google continues to have a freakishly impressive monopoly over search engine results with 91% market share. Sorry Bing, sorry DuckDuckGo, companies advertise their goods and services on Google search, and of course they also run YouTube. This is a great place for censorship and to control the narrative. Owning Google is owning digital real estate. Google continues to have an outstanding balance sheet with over $125 billion in cash on hand and just $15 billion in long-term debt. Google has a plan to buy back more than $70 billion in shares, so expect that share price to continue to go up. My 9th largest position, Amazon. Currently, I own 22.48 shares of Amazon, worth about $3,000 in equity. This is another company that's had a long overdue stock split recently. Amazon, despite how big of a company they are, with a $1.3 trillion market cap, the company is actually up nearly 40% since June. I don't think the best days for Amazon are over yet, guys. This is a company that just acquired One Medical, a membership-based primary care practice that has over 767,000 members, as they continue to chip away into the healthcare industry. Amazon has also acquired the self-cleaning robot company iRobot. Expect Amazon to continue growing their bottom line with more acquisitions and their growing cloud infrastructure business, Amazon Web Services, as well as with their gigantic online marketplace. Always reminding you to buy crap you don't really need. Stocks number 8 and 7 all lumped together, and that's MasterCard and Visa. They are the payment processing companies that are very similar to each other and have actually been quite stagnant in share price for quite some time now. During the C-19 pandemic, people weren't spending as much money on their cards, as many stores were closed down, or booking vacations on their credit cards, that wasn't really a thing. But recent earnings reports suggest the tide has actually turned. MasterCard increased revenues 21% year over year, and cross-border transactions are up 58%. MasterCard and Visa have ridiculous margins at around 55%, which means they're keeping 55 cents of every dollar in revenue that comes in. Remember, these companies take a small percentage of all the sales done on their cards as a fee. Both Visa and MasterCard should continue to profit from this growing trend of buy now, pay later. Because, there's nothing more American than keeping people in debt forever. I wonder if Uncle Joey will next forgive $10,000 of buy now, pay later debt. I currently own 16 shares of Visa for $3,300 in equity and 10 shares of MasterCard, making up $3,500 in equity. Together, these two giants are about 6.5% of my portfolio alone, so I have a pretty big conviction in them. Both companies also pay dividends that are under 1%, but this has been trending up in recent years. My 6th largest position, Applied Materials. If there's any stock I've been hoarding more and more shares of, this year it's been Applied Materials. AMAT is the semiconductor parts manufacturer. The entire planet has semiconductors all around us. Anything that is electric has semiconductors flowing through it. I cannot see that going away anytime soon. Remember, we have a global shortage of semiconductors because the demand is so strong, we can't supply enough as a human race. This company was founded in 1967. It's brought in $25 billion in revenue the last 12 months and also has over 16,000 active patents. Applied Materials in their latest earnings report recorded record revenue, and they had so many orders that they're actually backlogged. Semiconductors are found in our smartphones, personal computers, and even in cars where there is a severe shortage and strong demand for cars. Analysts expect AMAT earnings to increase 14% annually for the next 5 years. This was a stock that reached $167 in January of 2022 and has fell nearly 40% since then. Hence why I think it's a steal at these prices, and I have been buying and buying more shares almost weekly. I currently own 36.32 shares for $3,700 in equity. Stock number 5, United Health Group. Okay, dividend investors, you will love this company. The health insurance giant has put up amazing returns over the last 10 years. The stock is up over 925% as the company continues to post impressive earnings after earnings. They actually reported $80 billion in revenue this last quarter. Now analysts, they don't see this slowing down anytime soon, as they actually predict double-digit growth for each of the next 5 years. They have a buy rating from 17 out of 20 analysts, and none of them think this company is a sell. It seems like a no-brainer with its given track record. UNH is also an amazing dividend company, raising their dividend for 14 consecutive years, and their 3-year CAGR is a blistering 18%, and they only have a 34% payout ratio. As an investor, I try to find great companies like UNH that give you the best in both worlds in both growth and dividends. Alright investors, that was positions 10 through 5 of the largest positions in my portfolio. Be sure to check back in a few days for the top 4. Investors, I used to make these videos all the time, but I stopped because enough of you weren't hitting that like button. So make sure you smash that like button. That really acts as feedback for me to know that you actually like these videos and want to see more of them. Also, leave me a comment below telling me what you think of the stocks I own and what some of your favorite positions are. As always, my videos are found in podcast form under the Collect Cash podcast name, and I will buy, stash, and forgive your student loan debt later.